Hello, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. I want to welcome everybody to the daily FX walkthrough. Going to get started in just a moment. What I'm going to do tonight, as always, is walk through the latest technical report by Jamie Setley at DailyFX.com. So let's go ahead and pull up DailyFX.com, and usually the first thing I do when I get there is scroll down to click on Jamie's report. So let's go ahead and do that and read the synopsis on top. Euro 143 may thwart additional rally attempt. Euro dollar 143 resistance should be strong. Dollar yen reaches new low. Risk move to 88.90. Pound dollar drops into support. Trend remains bullish. So let's go ahead and pull up the charts. There are a few charts that I want to get to tonight, and let me slide this over a bit. I am sorry about that. The first chart is the euro dollar, and this is the what we've been watching for the past several days. Obviously, we're in a very strong rally here. That initial entry near the 130.85 area, that's some 1,400 pips in the past now. And as I mentioned during yesterday's report, now is the time just to hang out, hold on maybe to a very small position, but I wouldn't recommend any new entries here, as the rally is in full swing now, and in my opinion, the easy gains have already been made. Any entries now, you're incurring a large amount of potential risk when entering here. And even though you might be trading in the direction of the overall trend, it can get very tricky when these rallies unfold as they are now. But in my experience, as the downtrend was relentless, we can now finally see the flip side of that, and now this at least short-term uptrend is proving to be just as relentless as the downtrend was. The next chart is the Kiwi dollar. Same thing here, same story. I was mentioning that 56 figure. I actually exited my trade for a small gain, but we can see prices have exploded since that breakout above the 56 figure. Same logic would apply here. Maybe hold a small portion of the position, but again, in my opinion, the easy gains have already been made. The next chart is the pound dollar, and again, same recurring theme here in terms of bearish US dollar. We could see that the nice entry off that support line, and as I mentioned yesterday, we might start to take a little bit of profits, and the same thing would hold here. If you have a smaller position, I'd recommend maybe holding that, maybe look to exit near that 157 figure right now. But we could see, like, this is a good example on the pound, because we could see prices peek their head above that 57 figure, and then before you know it, just less than a half day later, prices have dropped 400 pips, only to rally from that point up another 200 pips. So that's the danger in trying to play these rallies when you don't have a good risk-reward entry, or you don't have a solid technical basis for your entry. You can get caught in these downdrafts, and then you could be exited from the trade, even though your overall trade idea might prove to be right a week or two down the road. That's why it's just so critical to get that good entry. And the way I like to describe it, getting a good entry, and let's say you did enter on this trade that's about 149.50. This is a trade that I set forth, I think, about 3 reports. All previous reports are located directly above this video if you are viewing this video on the Daily FX forum. If you're viewing this video on Daily FX, you can click where it says full article, and then there's another link where you can click to see the full screen. So just in case the video is a little bit too small for you to see on Daily FX, we do have the option to view a much larger version of the video that you're presently viewing. So anyway, back to what I was saying in terms of getting a good entry, and I like to equate getting a good entry as being protected in a bunker. Let's say we're at war or something like that, and when you kind of eliminate that good price, or you've eliminated your hiding position, if you will, and you're susceptible to sniper fire, small arms fire, if you will. It's just a war analogy, if you will. That's kind of the way I view it. And you're taking unnecessary risk by trying to enter a trade away from a clear technical support level, in this case, as we are going along, and you're exposed, obviously, to all those dangers of doing so. So that's why it's very important when I get a good price, and this is my personal opinion, the way I personally trade, I like to protect that price, and I don't want to give that up for anything. And so that's what I would recommend moving forward. So what do you do now? Let's say you're viewing this video for the first time, you've missed all these rallies, or maybe you listened to some of the things I was saying, and maybe you weren't able to get a proper entry or something like that. you have to get over that, and you just have to move forward and wait for the next clear opportunity to present itself. And one of the biggest dangers, one of the biggest mistakes traders make is they try to compensate for that feeling of having missed out. So, and that's a big danger. You have to eliminate that feeling. Another big problem, and after these large rallies occur, is greed and not being able to take a step away, lock your gains in, and then kind of just hold a small position, knowing that if the market were to completely reverse at this point, you'd still be holding on to a good portion of your gains. So right now, protecting your capital should be your main goal, as it always should be, but even more so now, assuming that you made some gains on this rally among at least the four pairs that I'm going over today. The last chart is the Aussie dollar. Sorry to get off on a rant there. The Aussie dollar right now, as I was mentioning yesterday, I was waiting for a close above that 70 figure. It appears as though we do have it. So this is the next opportunity, something that we might look for moving forward. But however, as this has been lagging the other currency pairs in terms of the explosiveness of this rally, it could indicate a weakness in the Aussie itself. So with that being said, I'd have a slight bullish bias against that 70 figure, maybe look to enter near the 70 figure exactly, or maybe a little above that, maybe 70.10, 70.20, with a stop maybe around 69.50. So over the next few hours, I might look for maybe another 20 or 30 pip retracement from the price right now at about 70.57. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.